So we're into 2021, and stocks just suffered their worst start to a year since the dot-com crash. And according to some, U.S. stocks will sink further in coming months. So what should we do? Well, let's take a look at three billionaires and see what they're saying. Now, it's been a difficult year. No, decade for billionaire investor Carl Icahn. He's been net short during the market's historic surge in the past 2 years. He's made money on other ventures, but his recent record's a bit tarnished. Regardless, he's someone we need to pay attention to. Recently, the legendary corporate raider and billionaire warned of the possibility of a significant decline for stocks, and he predicted that wild rallies in the market always meet a dramatic end. And in a recent interview, Icahn stated, "In my day, I've seen a lot of wild rallies with a lot of mispriced stocks, but there is one thing they all have in common. Eventually, they hit the wall and go into a more painful correction. Nobody can predict when it will happen, but when that does happen, look out below." While Icahn refused to go into specifics of his position, he said he was well hedged. However, one can say that he's been well hedged for most of the past decade. According to Byron Wein, vice chairman of Blackstone Group, U.S. stocks will sink in coming months, but then resume their record setting rally, and faster growth will spark inflation and higher yields in treasuries. And this was part of a list of surprises for 2021. A year ago, Wein predicted the S&P 500 would extend its record-setting rally, eclipsing 3,500 at some point, and subdued economic growth would prompt the Federal Reserve to lower its benchmark interest rate to 1%. Well, not bad. This year, he believes the S&P 500 will tumble almost 20% in the first half of 2021 and then advance to 4,500. He predicted that the success of between 5 and 10 vaccines together with an improvement in therapeutics will allow the U.S. to return to some form of normal by Memorial Day 2021. However, some of his forecasts for 2020 didn't come true, including a rally in oil above $70 a barrel and a jump in the 10-year Treasury yields towards 2.5%. But like him or not, we should pay attention because he has made billions. For the coming year, Wein also expects the Fed and Treasury will continue their accommodative policies, and he believes faster inflation is set to fuel gains in gold and boost the allure of cryptocurrencies. Now, I'm sorry we can't bring you our third billionaire because Jack Ma, co-founder of Alibaba Group, is suspected to be missing. In October, Ma called for a reform of China's banking system and criticized Beijing officials for stifling innovation. Seems that this may have earned Ma the opportunity to be disappeared by the Chinese Communist Party. Oh, what a wonderful country that is. Imagine if the U.S. government disappeared Elon Musk or Jeff Bezos. All right, you wouldn't miss Bezos, but Elon? I still like watching those SpaceX launches where they land those rockets again after the launch. Me, I would miss Elon. Okay, let's just take a closer look at our charts and see what they say about the market. And now we're taking a look at the 6-month daily chart on the spiders, the SPY. And as you can see over here from that bottom there to this top here, that showed Monday was a pretty difficult day. However, it ended up at this point here, which is just riding along that 20 EMA. Now, given the move all the way down here, I don't think that it really is all that bad. Let's move down here into volume. Volume did pick up, and that is somewhat of a cautionary flag, but still, I don't think it's significantly negative. Moving here into the MACD, you can see that the fast line attempted a move through the slow line, but got reflected back here on Monday. So I think it's going to take some time and perhaps move a little bit to the downside, but more sideways before it gains enough steam to give another attempt at running through that slow line on the upside. But we're still well above that zero line, so there's plenty of strength. Moving into the histogram, you can see that this level here is really not too bad. So it's going to give another attempt moving that through that zero line shortly. into the price rate of change, you can see that it's been riding that all the way down here, but it's still above the zero line. It reflected off there, and I think we're going to get another reflection perhaps here relatively soon. So again, things really aren't too bad. Into the relative strength. Now, we had this reflection there, reflection here, and we did go through the 50 or midline just barely here. But again, I don't really see that too much as a problem. Into the stochastics, the fast line has moved up and over, and it's just coming on back down again. But I think it's just going to reflect soon enough. I don't know if this is really all that good of an example of what's been going on, but oftentimes they have these moves in attempt to moving up and through it. It might be successful only to come back down again, gain enough steam before it can have a run. And I think that's just what's happening here in the Williams, not telling me anything all different than what I've already told you. Back up here to the price chart, I would just say give it a little while. We're riding that 20 EMA, and I think things are still strong enough. There's a few jitters on Monday, but I don't see that as a problem. So let's just watch this and see if it continues on up. And for today, that's ChewDog Charts. Thank you.